What is included on Schedule G of Form 706? Have you ever wondered what happens to property that someone transfers during their lifetime but still has some control over? This is where Schedule G of Form 706 comes into play. It is a crucial part of the federal estate tax process, especially when planning an estate. Schedule G is used to report specific types of property that are included in a decedent's gross estate. This includes property related to certain trusts and interests that the decedent retained. So, what exactly does Schedule G cover? First, it includes property transferred with retained life estates or powers. For instance, if a person transferred their home but kept the right to live there or receive income from it, that property's value must be reported on Schedule G. This retained interest means the property is still part of the estate for tax purposes. Next, Schedule G also accounts for property subject to a general power of appointment. If the decedent had the authority to appoint the property to themselves, their estate, or even their creditors, this property must be included as well. This is important because it ensures that all assets under the decedent's control are accounted for. Another key aspect is property transferred within 3 years of death. If someone transferred property during this time and retained certain interests or powers, it must be reported on Schedule G. This rule helps prevent individuals from avoiding estate taxes by giving away assets shortly before passing away. Additionally, Schedule G includes property interests under specific sections of the Internal Revenue Code. These sections, namely 2036, 2037, and 2038, relate to transfers where the decedent kept possession or enjoyment of the property or had the power to alter or revoke the transfer. From an estate planning perspective, understanding Schedule G is essential. It captures assets that may seem removed from the estate due to lifetime transfers but are still taxable because the decedent maintained control or benefits. This can significantly impact estate tax planning strategies, especially when using trusts or making lifetime gifts to reduce tax exposure. Executors and estate attorneys must carefully review any lifetime transfers or trust arrangements to determine if reporting on Schedule G is necessary. This ensures compliance with tax laws and accurate estate tax calculations. Properly completing Schedule G helps avoid underreporting the gross estate, which could lead to penalties. In summary, Schedule G of Form 706 includes property that the decedent transferred during their life but still had retained interests or powers over. This schedule is vital for accurately reflecting the estate's value when the decedent maintained certain controls or benefits over the transferred property. Understanding these details can make a significant difference in effective estate planning.